Hey, I want to thank every one of you out there that messaged me, either texted me yesterday or sent comments saying welcome back. And I really appreciated that. Rob appreciated that. Rob's got Mila with him this morning.
You can't see. Oh, there she
She's over there
is.
growling at me like she's a big badass dog. No. Anyway, yeah, you can see good today. I just want to make sure the color. It looks pretty bright, doesn't it?
It looks fine.
All right,
Oh,
cool,
yeah.
cool, cool. Hey, I wanna talk about a article that came out from the Gold Bureau, and they were talking about on February 7th, the Federal Reserve Chairman Jerome Powell actually spoke with a billionaire philanthropist, David Rubenstein, at the Economic Club of Washington D.C. In other words, he was kind of like it was kind of like an interviewish type scenario. Sit down with David Rubenstein. And if you don't know who David Rubenstein is, he is a billionaire philanthropist. And they were talking about the U.S. economic outlook and the monetary policy. And Rubenstein asked several questions, and he was jokingly trying to get Powell to commit to a time frame and a specific benchmarks and economic numbers to actually predict the future Fed rate decisions. And as always, Powell spoke in generalities. In other words, he kind of like, he's just all over the place, right? That's what lawyers do. Remember, he's a lawyer. And so at the end of the speech, to predict future Fed rate decisions, as always, Powell spoke, like I said, in these generalities. And at the end of the speech, Rubenstein joked that he didn't get Powell to say anything that he didn't
Already know.
didn't want, right? And overall, Powell's tone, as always, was hawkish and very consistent to previous speeches promising continued rate hikes higher than the market expectations and a long way to go to fighting inflation. And so I want to share this with you because inflation is here and it's here to stay, just like they said, just like Powell reiterated, it's here for a while, and they've got a long way to go to keep fighting inflation. So what does that mean? That affects you, me, Rob, our dogs. It affects everybody. Dog food prices are higher because the ingredients in order for them to make the dog food is higher at the supplier. So the Federal Reserve actually raised interest rates by 25 basis points at last week's FOMC meeting. And the jobs report came out after the FOMC meeting that showed an increase of 517,000 jobs. And that was in January alone. And Rubenstein asked multiple hypothetical questions about what the interest rate hike would look like have been if the FOMC had known that the jobs report was going to be so strong. In other words, he was trying to get Powell to say, look, if you knew that the job reports were going to be this strong, which I think he probably did, then, what would the interest rates, what would you have done before? And Powell used the opportunity to strengthen his argument for continued rate hikes. So the U.S. employers added 517,000 jobs in January. And the labor market is strong because the economy is strong. And as I said, it's a good thing that we've been able to see the beginning of disinflation without seeing the labor markets weaken. And it's just that there's a lot of demand. There's a lot of demand. He says that there's a lot of demand for workers. And in fact, if you look at the supply of workers versus the demand for workers' demand for U.S. workers, it's now more than 5 million greater than available supply. So Powell argues that the supply and the demand will cause employers to pay more to attract workers, and low unemployment, and highly paid workers are inflationary, and contrary to the Fed's attempt to destroy aggregate demand. Rob, you see what Powell is doing here? What are your theses? What is your ideas on this?
I mean, he just can't give a straight answer.
He can't, can he?
No. And I mean, what he's giving us is, I mean, most of it we already know, right? Most of it we see happening. But then again, it's like he doesn't go into detail on, or he doesn't share that some of the largest businesses like Salesforce, Amazon, Google, Facebook, and many other companies are not hiring people. They're laying off people. They're laying off everything good?
Yeah. Keep going.
Yeah, they're laying off high-paying salary jobs.
Right.
So, I mean, if you're looking to hire a grocery bagger at Ralph's or Kroger's, is that really an increase, and is that really a dictation of a strong economy?
True. And listen what Rubenstein then asked. So Rubenstein asked about the Fed's balance sheet. And he wanted to know the exact goal number. And the current Fed balance sheet is $8.4 trillion, down from $9 trillion a year ago. And we're in the process of shrinking the balance sheet passively. He says, I should say, as Treasury securities on our balance sheet mature to a monthly cap, the net balance sheet shrinks by that amount. So the same thing happens with mortgage-backed securities. And the balance sheet is shrinking. As far as the target level, we haven't put a specific dollar amount on it. And this is what Powell stated. He explained that the Fed is looking for deposits at reserve banks to return to pre-pandemic levels. He says it will be a couple of years before we get back to that level. And when asked how long it would take to get inflation to 2%, Powell stated, my guess is that it's certainly not just this year, but next year to get close to 2%. He said, my guess is we'll have to do more rate increases and then look around to see if we've done enough. So that's not a concrete answer in no way, in no means, at any kind of situation here. And you got to remember, and this is what I was talking about yesterday, when President Trump handed everything over to this friggin' Biden administration, he gave them a rip-roaring economy, and the inflation was only at 1.4%. And now look where we're at. We're at a 40-year high. So what does this all mean? Well, Powell spoke on the same day as the State of the Union. And most media outlets now are analyzing the speech that Biden gave at the State of the Union. And so it's possible that many people haven't heard what Jerome Powell said about ongoing interest rate hikes and price instability until at least next year. And there's a good reason that people missed his words. But he has been saying the same thing for nearly a year. So this, like I said, this isn't anything new. He hem-hums his hawkish little stance, his little tweaky, whatever you want to call him. He's a tweed. And he doesn't give you the straight facts. And that's what lawyers do.
Yeah.
They don't want to give the straight facts. They're always trying to figure out how they can fool the jury or the judge, right? That's what lawyers do, right? They're either for you or they're either against you because you have a prosecutor and you have a defense. Well, what is Powell? Powell is the defense. Mm-hmm. He's the defense attorney, and he's defending the Federal Reserve.
Yep.
Right? You agree with me on that, Rob?
Yeah, 100%.
So So when you really look at this whole thing, there isn't a good reason that market participants haven't taken a more defensive posture after a year of warnings and economic pain. And whether optimistic and wishful thinking, confirmation bias, or simple misunderstanding, the market now has repeatedly ignored Powell's speeches. And so the Fed has done what Powell consistently said the Fed would do, and the January jobs report strengthened his resolve for a more protracted fight. So most market participants take the ostrich approach, and we talk about this where you put your head underneath the rock or in the sand, and you just don't see it, and it doesn't want to see the facts. I can't tell you how many clients that I talk to, Rob, you probably too, and they don't even want to open up the envelope when it comes in with their retirement statement from either one of the Edward Jones, Fidelity, or any of them. I talked to so many, and they're like, I'm like, well, what is your contract balance? I don't even want to see it because I know it's not going to look good.
Yeah.
I'm like, well, yeah, probably right. You're probably right. So, keeping your head in the sand, if it doesn't see it, it's not happening. And at the FOMC, Chairman Powell said that there would not be rate cuts this year. And the market heard there will be one more rate hike and a cut later this year. And a few days later, the market questioned a little when the jobs report came out and said, okay, 2 more rate hikes and then a cut later this year. And the market has been behaving now this way since the Fed started raising rates last March. It's pure insanity is what this is. And does Powell mean what he says, or is the market correct that he means that something other than the literal meaning of his words? An axiom would say, don't fight the Fed. His track record is actually consistent. And everyone needs to decide what they believe and what actions are appropriate. Remember, at one time he said it was transitory.
Yeah, they all said it.
Right? It was transitory. So, people can ignore Powell's words, or they can heed them. However, my actual job, Rob's job, is to warn you about storm clouds. And it sure looks like more bad weather is coming our way. And it's up to you to decide whether you want to have an umbrella.
Yeah.
Right? And the warning signs are everywhere that things will be rough for a while. And Powell said it will be at least next year before inflation reaches its target rate of 2%. And billionaire hedge fund manager Ray Dalio said cash is more attractive than stocks and bonds right now. Let that just sink in. And a billionaire who makes money selling stocks says keeping cash in a savings account is a better investment than the product that he actually sells. And if you fast forward to the end of 2023, suppose Powell told the truth that interest rates would rise higher than market expectations for longer than the market actually predicted. And suppose that Ray Dalio is correct that stocks and bonds won't yield a 0.30% return like a typical savings account. And what will your portfolio balance become? What will it be?
Right.
Was it good or bad year for year investments? And how many years of retirement savings are destroyed if it was a bad year? And listen, you don't have to be a victim. You don't have to hide your money in a savings account only to get 0.3%, 0.30%, 0.30%. That's it. It's like nothing.
Yeah.
The national average, that's the national average of what a savings yields right now. 0.30%.
It'd take you 150 years to receive 30% on your money.
It's insane. Say that number again.
To get 30% on your money is going to take you 150 years.
150 years. I don't think anybody's ever been that old.
Hey.
So the average gold return, let me give you what that is, since 1971 has been 7.78% annually. So where would you rather have your money this year if history repeats itself? And most people don't know that the government allows a tax-free, penalty-free rollovers into precious metals IRAs. So it's easy to set up, but it does need to be done correctly. And Rob and I and all the other brokers here at United Gold Group, we're here to help you. So call us at 800-753-8534 or 323-310-5485. Or Rob, throw your number in there as well.
Yeah, that's 213-466-1283.
So call United Gold Group, and we also have as available for you, we can send it out to you, our asset protection guide that I worked hard to put together so that people would understand the benefits of having precious metals either in their retirement or in their safe at home. Hey, Rob, you mentioned something to me before I got into this conversation. We're going to get off here in a minute. But you mentioned something to me very important. You said that happened yesterday that I was unaware of that happened yesterday.
Yeah.
Share that with the
Yeah, so
viewers.
the World Economic Forum, they've been preaching the next global pandemic. Well, according to Klaus Schwab and, the members of the WEF, right? They've been talking about cyber attacks and how with a digital ID and a social credit score system, it could prevent the next global pandemic, which in their, what they're pushing is cyber attacks. So yesterday, and there's more to it. Yesterday specifically, you had Robinhood have a glitch. You had Facebook, Instagram, Twitter, the McDonald's app, TD Ameritrade's app, and about 10 other applications completely go off. You couldn't access your information. If you had,
You mean if somebody wanted to log into their account, they couldn't log into it from the app or from the computer? Overall.
Overall, like the entire.
So it was like an attack.
It was a cyber attack
on the financial markets.
Financial markets, the social media markets.
No kidding.
In fact,
how long did that go on?
Like 5 to 6 hours.
See, isn't that odd? Klaus Schwab and the Economic Forum, they predicted all this was going to be coming.
And guess what? Italy last week was going through an all-out cyber attack on their entire internet. So you couldn't access any applications. You couldn't access any of your internet. You couldn't do anything. You were completely in the dark.
So do you think that is just like a test?
Of course, it's a test. Yeah, it's a test. Just like a couple weeks ago, we had the deal with the airlines, right?
True. And then what did they say? They said one person made an error.
Yep.
One person shut the whole damn FAA down.
Yep. Yeah.
Unbelievable.
So yeah, these are
so
small
this
tests.
happened for several hours then yesterday.
Yeah.
So nobody could access anything? Huh.
Nope. Yeah, and then Robinhood, they their short sides of their option trading had a massive glitch. $57 million lost.
Wow.
In open shorts. So if you were an individual who had a $2 million short or a $3 million short, you lost $3 million like that. And Robinhood doesn't have to pay that person back, right? So just imagine this happens to your savings account or to your investment account, and accidentally there's a massive glitch or there's some sort of error, and you get completely liquidated. Right. And they're like, oh, my goodness, we apologize, but, according to your contract, we don't have to give you your money back.
Wow.
Here, take, common bank stock instead.
Yeah, that happens.
Yeah.
Well, look at my client that went into her credit union and they told her she wanted $80,000 cashier's check, and they told her she had to come back in 2 weeks, that they didn't have the money.
Yeah.
They didn't have the money. And this ain't no joke. I'm not making this up. This is real.
Yeah.
Sorry, man. We don't have your money. What?
Some crazy
She
stuff.
went batshit crazy over all that. Hey, we're going to cut it off. I don't want to make it too long. I just wanted to go over, what Powell stated, the labor statistics. It's still shocking to me. I don't believe these numbers. I'm just that way because I see massive layoffs every single day. I keep hearing. I heard another 7,000 from. You got Salesforce. Rob, who is it? Let me check real quick. 7,000 people being laid off. All you got to do is Google it. 7,000 layoff. It's driving me nuts that I cannot lay off. Who is it, Rob? I'll just Google it. Layoffs. Here we got a caller wants to invest. All right. 7,000 layoff. Disney. That's
Disney.
who it is.
Disney?
Disney. Disney is laying off 7,000 people. Now, where are those people going to go to work? So this is what I'm talking about. No wonder the numbers went up. They lay off and then they hire. So no wonder the numbers go up.
Yeah.
They're really not real, is what I'm trying to tell you. It's not real. Don't fall for this scam. Remember, attorneys are for prosecution and defense. That's all I got to say. See you tomorrow. Take care. God bless every single one of you. Actually, I won't be here tomorrow. I have to go to a doctor's appointment. But we'll see you soon. We'll see you on Monday. Take care. Be safe and